I've been with Savills in Amsterdam for about 6 months now. They didn't have a logistic platform before. They were very active on the investment side in Holland. Obviously, they see logistics becoming a very developed asset class and becoming more interesting in terms of wanting to be present on that market in Holland. So they've asked me, together with one colleague, to head up the new logistics and industrial team to get some feet on the ground and just know what's happening in the logistic market, and giving the investment team also an edge to getting product out there, in the sense of if you're not on the leasing side, it's hard to get to product early, and if you're not getting to product early at this time in Holland, you're not going to be able to get product. So this is one of the reasons that they've asked us to head up the new team. Obviously, Holland, very active market because of its location. Everybody knows Holland is a very logistic-wise very good location due to the harbors, plus the entry into the mainland into Germany. Plus, there's a lot of scarcity coming now with the land available in Holland. So a lot of pressure. The yields are coming down. Still a lot of demand from logistic providers. So yeah, active market. A lot of activity. Some political turmoil also in Holland happening. So it's going to be an interesting year, I think.
Okay, good, Dirk.
Thank you. Good morning, everybody. So I'm Dirk Sosef. I work at Prologis. I think everybody has heard about Prologis in this room. So we are a global owner and developer of logistics real estate. Across the globe, we have roughly 60 million square meters assets under management. In Europe, this is around 17 million square meters, around 800 buildings. And what's key for Prologis is to really focus on the long term. So when we develop our own buildings across Europe, we really develop for our own funds, really to be there in those markets for the longer term. Within Prologis, I oversee in Europe the research and strategy department. I think I joined at perfect timing, mid-2011. At that time, there was a kind of turning point in the market where e-commerce was catching up, when there was a better, increasing understanding about the market conditions. My role within research and strategy is to say it's very easy to translate all market trends we see across Europe into clear recommendations for our senior management team, for our investors and our customers, so users of our office space. In addition to all the data we use, for instance, from Kevin and other agencies, I think the unique position I have as a researcher is that due to the scale of Prologis, I can use a lot of data from our customers. We have roughly across the globe 4,500 customers. So that gives a lot of kind of unique insights about what's happening in the market, and that data becomes increasingly valuable for us. In addition to that, I'm based in Amsterdam, and I try to oversee the whole European market. What I try to avoid to be seated in a kind of ivory tower and say, okay, this is happening in Czech and this is happening in France. So that's why I need to be in daily touch with our local teams we have across Europe to get a better understanding about why are there nuances between the different markets.
Great. Christian.
Thank you, Richard. My name is Christian Jamison from Valor Real Estate Partners. We're a new investment partnership formed about 6 months ago, together with some US partners, to pursue a value-add strategy on industrial and logistics on a pan-European basis, but primarily focused on the main Western European markets. And I think it's a very interesting time for our sector, as we've heard from Kevin. And you have two factors. You have changing retail patterns, but you also have a very uncertain economic outlook. And so how you generate value-add returns is more challenging. We're late in the cycle, and so we're really focused on supply-constrained markets, and that really is urban infill in our minds. And I also think that's the area that benefits most from these changing retail patterns. Actually, the last delivery to the customers, the population centres, that's the challenge. That's where the land is most constrained, and that's also where the land is likely to have the highest alternative use. So that's a little bit of our sort of focus as we get started. We're primarily looking in sort of UK, Germany, Netherlands, France, and that's Valor.
Great. Christian. some changes for you at Log4Real.
Yeah, my name is Christian Bischoff. I'm founder and CEO of Log4Real. We are an investor and developer of logistics and light industrial warehouse space. We are located in the powerhouse of Europe in Germany, so just to say. And
Here we go.
because retail is a nice piece, but in Germany, production is much more important. So we have to, of course, react to that also. I started as a logistics guy, supply chain. I was sales director for TNT Express in Germany. And then in 2004, I went to Örenpro and Goodman to start up the operations in Germany and in Austria. And then afterwards, I went to Prologis, to a region called Northern Europe, which started in Vienna and ended in the Baltics. And with, of course, Germany in it and Benelux. And it was a great time, learned a lot, did a lot, signed a lot, no spec, all pre-leased. And then I said, okay, why not doing it myself? And last year, the big bang came because I joined forces with the Zech Group, which is the biggest development company in Germany. They are very strong on multi-apartments, on office, on hotels, and so on, but they didn't do logistics so far. So now we joined forces, and we're just trying to get a little bit bigger. It's about warehouse space of 550,000 square feet and more in core markets, multi-tenant. And we're good. We have started good, and I really look forward to share a little bit more in this discussion.
Okay, good, thank you. I'm going to start with you, Dirk, just to get your sense. I mean, so we've seen from Kevin that logistics has performed well, and actually despite a lot of the political shocks. So do you think that, in a way, it's become a sort of safe haven from that? We saw that, in fact, the market has performed well, even though there's low growth. What's your sense of that, just in terms of the general trends?
Well, as we've seen in the past, it's been an asset class that has responded the least to political turmoil. So I think it's going to become even more active in the sense how the bigger the political turmoil is becoming, since it's been proved that it's the least affected asset class. I think it's more likely to see more demand in logistics when the political turmoil becomes more heavy, and making it even a more important asset class than it already is, especially in these rough times, politically seen, unforeseen, uncertain times, definitely.
Okay, good. And Dirk, if you want to pick up that, do, but also we've seen from the slides as well that industrial is performing in terms of the actual investment volumes, and also in terms of the sort of indicators for the wish list for investors. What do you think is driving that? Is that just e-commerce, or are there other things that are coming into play?
I think it is not at all, let's say differently, it's not only e-commerce. E-commerce is, of course, a very new driver of demand. It's important. I think it put the whole logistics sector to a broader community, that people now start to understand what logistics means. But in general, logistics makes modern life possible. I think that's one key fact. And when we are thinking about, turmoil in the European market, we have seen a lot of turmoil in the European market in the past years, of course, with the euro crisis, with the global financial crisis, etc. So the key question I was asking myself, why, if for instance, was then demand holding up that good? One of the key reasons, in my view, is that Europe, specifically, is an undersupplied market. So, just one number, I always like numbers. When you look at the European market, and you compare this with the US, Europe has roughly the same size of economy, in terms of GDP, when you look at inhabitants in the European Union and compare us with the US, we have more inhabitants here. So you would think our logistics stock level would be roughly the same. But in Europe, we have 2.5 square meters per consumer household. While in the US it's 3 times more, 7.5 square meters per consumer household. So we have 3 times less, let's say, modern logistics stock. And this undersupplied market creates structural demand for a market. And that's why you see in our market a disconnect between all the turmoil we have seen and we continue to see in the market and, let's say, the growth of our market.
And let's pick that up a little bit, Christian. In terms of those trends you highlighted, that you're particularly looking at that the sort of inner city urban ones. Where do you see the opportunities for that? Are you expecting to see growth in terms of values? Are you expecting to see growth in terms of rents for those? What's particularly attractive for you about those areas?
Well, exactly. I mean, we're going to see, I think, growth in rents. That's where we see the demand really beginning to increase. But at the same time, supply is naturally constrained by the virtue of those locations. And we're seeing rents trending upwards. And I think that's something we'll see continuing. Whether we see cap rates falling, recognizing that anticipated trend of growth, you know, I'm not so sure. I mean, cap rates are already at very low levels. There is scope for them to fall because interest rates are extremely low and unlikely to stay low for a long time. But that's certainly not something we're going to underwrite. That would be icing on the cake. Where the way we're generating returns right now is by focusing on growing the income we can generate from that particular asset, that plot of land, whether that's expanding it, whether that's growing the rent, whether that's somehow rebasing it to a market rent where it's well below that. It depends on the situation, but really it's about income growth. That to me is the key. And this is where I think demand is most robust in these urban locations, because the trend of urbanization continues, and that's separate to e-commerce. That's just modern societies are generally congregating in mega cities, and those cities are likely to continue to grow, and that's effectively the bet we're making. And certainly, you know, we're investing our own capital. The 3 partners, we're funding all of our deals right now, and you know, I can sleep well at night. You know, buying in these key locations around the big cities of Europe. You know, if I was doing more what I would call commodity space in the sort of traditional logistic heartlands, the Midlands, these areas, I mean, that, in my view, tends to be where you see more volatility of demand when economic times change, because that's huge investment for these companies. Actually, 150,000 square foot near a big population centre, that is not such a big commitment. That's actually essential to delivering this service everyone's talking about. And it's very unlikely that they will sort of cut those loose. Plus, in these urban areas, you also have a lot of small and medium-sized companies. They are family-owned. They will hold on to their real estate with tooth and nail because that's essential for their business. You know, the large 3PLs are much more ruthless when it comes to their real estate decisions. So for this moment in time, you know, this is the reason why we're focusing on what we're focusing on and why we think there'll be rental growth. Okay, good.
Christian, I just wanted to focus just a little bit on, I mean, Kevin mentioned briefly the sort of political risks. How do you look at that, let's say, in terms of, we had Brexit last year, how are you looking at that in terms of the UK? How do you look at things like what may or may not happen in the French elections, the Dutch elections? How much of an impact does that have on your investment decision?
Yeah, I have to say that Brexit brought money inflow to Germany like never before. I really have to say
that's encouraging for everyone here.
I'm so sorry, guys, really. I mean, but it's like it. I mean, I have calls every week of investors wanting to come to Germany. I think that I don't see it really as a political turmoil. I just see that, the past order is changing. Now the question is, where does it change? What I think is that the basic underlying trends of everybody needs to eat, everybody wants to drive, everybody, that's still the thing. Do we have a little bit more border controls, yes or no? That remains to be seen. However, we see in Germany, especially on the continent, with a strong production base, we see a lot of old production facility and warehouse space that needs to be replaced. And what we see is a scarcity of land in good locations. So you need to explain why you want to come with a 550,000 square feet warehouse in a metropole area. Yeah? You need to communicate with your neighbors who are living in Resi, or living in, and then all the trucks passing all the time. So, and if you are able to do this, then you're in a unique position for a warehouse. And if you're a trailer developer, as we are, we are really focusing on this metropole areas where it's also, from an environmental standpoint, very, very important. So you have short distances to your customers, private or business. And so we have a completely other perception, because we see that companies are really moving forward, being more competitive, wanting to have more competitive space, wanting to have a nicer environment to work in, even though also for logistics. And logistics, real estate and production, or light industrial real estate, is low-tech combined to the other asset classes. So these are mega trends for us, which are completely under the radar, of course, of the normal political discussion. But we see a lot of response coming back on that. And this is what we roll out everywhere in Europe. And we hope that all the borders remain open. But however, we still see very, very good opportunities to invest in UK. And I mean, Brexit or not Brexit, what I see is that land hopefully is getting cheaper for us. So it's a good investment opportunity. So that's where we are.
Dirk, I wanted to pick up just pick up a couple of the other mega trends as well that Kevin was looking at. Are there things from the States that we're going to see, especially? We mentioned there the Amazon shop where you just simply walk out. Are there other things that you're studying from Prologis' kind of experience in the US that we are going to be seeing here that will impact on the market?
So first about e-commerce, I think there are two interesting trends we are currently seeing in the US, which could come to Europe as well. The first trend, and this is about Amazon, I think it's interesting to see with Amazon, when you look at their waves of expansion in Europe and in the US, is that, of course, they started in the US and they are, let's say, most ahead of it. They are right now closing some of their less strategic assets, big mega hubs, and moving towards the metropolitan areas. So they are closing those mega hubs. I think that's an interesting trend. Secondly, it's of course extremely interesting when you think about the last mile delivery, that they are now, last year they leased an office building in Manhattan for their last mile delivery. So they are leasing an office building for warehouse purposes. Very interesting to see how they work, for instance, with elevators and their goods, and how the other occupiers in that office building like it. But I think that's an interesting trend, how Amazon is developing and what you see in the US. By the way, when your question was, what do you see in the US and how can this come to Europe? I think when you look at the e-fulfillment trends, please keep in mind that the UK and Japan are leading in e-fulfillment trends. They are ahead of the US in terms of e-fulfillment, e-commerce. So when you want to look at drivers of innovation, I would look at the UK and Japan. There are multiple reasons for why is the UK and Japan leading. I think one reason, and not a lot of people know, is that it has to do with their supply chain. They are both islands, and their supply chains are naturally focused, let's say, focused on the end consumer. So they have kind of inbound supply chains. And in that way, it's much easier for an e-commerce company to weave into that supply chain, which is already focused on your end customer. When you, for instance, think about the Netherlands and even the US, those supply chains have a more bigger scale. And when you take the Netherlands as an example, where it's really focused on outbound supply chains mostly, so outbound of goods, it's trickier for e-commerce player to get in place that and go the different way around. So that's one, in my view, the reasons why the UK and Japan is leading. Another thing, last but not least, when you think about the overall trends in logistics real estate, what we see right now in the US, US is ahead of us in the cycle, longer in expansion mode than Europe is. When you look at the US, they still see very decent rental growth numbers. In general, they have 2-3 years ahead of us. They still see very decent rental growth numbers. Of course, both markets are completely different. Within Europe, significant differences as well. But I think it is encouraging to see how long that cycle lasts. It's the longest expansion cycle in the US ever seen for the logistics real estate market.
Maybe just with you, Doug, in terms of the Netherlands specifically, where are we at the moment with e-commerce? Where are we with the last mile delivery? What's the kind of take-up of that at the moment?
Well, what we're seeing in Holland is that the bigger occupiers like Amazon, Alibaba haven't yet come to Holland because I think the market's not interesting enough yet. We're trying to poach them to come, but they're not giving us any info. I think there are definitely some trends which are now becoming more and more a reality in Holland. The urban DCs are becoming more of a thing in Holland. Although, because of the fact that Holland is so small, the urban DCs and the larger hubs, the differences in distance is not that big. What we do see is the European DCs are obviously in the southern part of Holland, which we see a lot of 3PLers using more campus models, in the sense that in the past they'd be in one warehouse for one client and they'd be back-to-back contracts with one client. Nowadays what we see is every larger 3PLer wants campus models. You could probably confirm this since you guys are building a few.
Yeah.
So what they do is they can be more flexible with their customers. As Kevin also said, occupiers are looking for more flexibility. This is a way for them to give that to them because they can fill space with different clients and be more flexible for their clients. So being able to act on changing demand from their clients.
Okay, and this campus model is therefore not in a city, but is outside the city.
Yeah, these are the bigger hubs, like the starting from 50,000 square meters and up. And these guys are looking to actually develop more parks-like environments, to just have their own park with no other users on their own park. It's easy for them with permits and stuff. So yeah, we see that a lot happening. And the urban DCs are becoming more and more visible in Holland. Also, there are definitely investors who are their key focus is even on these markets, because the fact that the yields have dropped on the larger parks, the core logistics parks, and they're not willing to pay the yields that these investors are paying at the moment. So what they do is they're widening their scope. So they're either looking at not just the bigger logistic hubs, but also definitely the value add locations, which are mostly close to the city, which can be easily repositioned and therefore used to be used for last mile delivery.
Okay, good. And I just want to pick that up with you. So is this more campus kind of shared facility? Is that what's happening when you were talking about companies shutting down their larger ones and moving? Do you think there's going to be more of a trend towards this kind of campus style centre across Europe, or is that specific to the Netherlands?
No, it's not specific for the Netherlands. It's really for the more pan-European distribution. So not last mile delivery, it's really for the longer distances. I think another reason why you see a rise of the campuses across Europe has to do with the management. So instead of, let's say, 20 different owners on a certain industrial area, there's one bigger owner managing the whole area. That's a kind of unique selling point to as a municipality as well. And secondly, and I think, for instance, when you land at Schiphol at the airport in Amsterdam, on your at one side, it depends on how you land, but on one side you have Fock Logistics Park, which is a big campus park in a way as well, close to the airport. What is one of the reasons why it gains a lot of interest from our customers? It's due to security as well. So in these campuses, you find a lot of high valuable goods as well. There's more strict security around those campuses, so you need to really gain entrance via gate on towards the logistics assets. So for some customers, that's very appealing to be located at those locations.
These campuses, sorry to dive in.
No.
Richard,
This is.
yeah.
You see, you've taken the instruction from the beginning.
There you
and
go.
You've gone with it. I like
Okay.
that. That's
Richard,
good.
These. Okay, I was just going to ask, these campuses, I mean, they sound to me like they're quite specific for the occupiers. So are you seeing occupiers willing to sign longer leases on them than generally? Because, you know, in the market overall, you'd say the trend is probably for shorter leases. But for these sort of campuses, if someone's going to develop it, I mean, are you seeing the longer leases?
Good question. I think it's first important to mention about those campuses, it's a more niche of the market as well. So I don't have a lot of evidence about, you know, a big trend. But indeed, I think these campuses in general can see longer leases. Why? Those campuses and those kind of, for instance, as I mentioned, that Fokker Logistics Park, a lot of our customers see these locations as they're one of the key strategic points in their total European supply chain. So for some sites, they can be more flexible. They say, you know, we can move from one side to the other. We are flexible in that. But they need to have certain locations throughout Europe for their supply chain to be efficient. So when you look at, for instance, retention rates, they are very high at those campuses.
I can just underscore this. We're doing campuses only in core markets. And we also look for longer leases, 10-year plus. I mean, one case, we're just doing a campus model near the Frankfurt airport. And there I just signed yesterday a 15-year lease with a Airbus supplier who's doing Airbus production parts in this campus. It's a normal warehouse, if you will, just more supply of electricity and some cooling and heating stuff they need to have, and 15 years is possible.
But on the other side, indeed, longer leases, you see those campuses, but I think at this time for the logistics real estate sector as it is developing, longer leases are not always the holy grail in the market. Sure. When you look at some markets, for instance France, which is kind of lagging in the cycle, and when you look at their rents relative to the prior peaks, they have quite some runway to go. When you are located in France at a very good location, you could even think like, okay, maybe we should go for a shorter lease right now as the market is just recovering instead of locking ourselves in for 10 years and we kind of miss this whole potential growth we have ahead of us.
You should tell that to the institutional fund manager because you know, you'll see a 15-year lease and he'll say, I love that.
I know. And I think that's about the active asset management you need to have.
James, you wanted to come in, yeah.
Sorry, James Markby at Logistics Capital Partners. Just a counterpoint, because it got mentioned a couple of times about the trend in the US of Amazon shutting their big centres, and then Richard, you mentioned it. Is there a trend away from the big centres to campus and flexible leases? We're a relatively small business, but we've got 580,000 square metres of secured pipeline at the moment. We started 2 years ago. My partners are ex-Amazon, Prologis, Goodman and CBRE. We almost exclusively, not by design, but almost exclusively because of the demand in the market, deal with large-scale warehousing. Everything's over 50,000 square metres. All the requirements, all the work that we work on, and we've got more than we can kind of deal with at the moment, is all for increasing bigger and bigger boxes, and tenants prepared to take longer leases because they know there's a cost and a price to having a small facility on a shorter flexible lease, and it comes in the yield. And that's not to say that there isn't demand from 3PLs who constantly want short flexible leases on 2 or 3 years rolling because it suits their contracts, but to kind of give the impression to this audience that there isn't a very strong growing demand for large scale long let warehouses is inaccurate.
Absolutely.
So and I appreciate everyone's got to defend their own portfolios and interests and all the rest of it, but that's a major thing. And the rental growth is it's limited by the yield compression. So there's a shortage of land, build costs are going up. Some developer margins are quite high. Small developers with low overheads have very efficient pricing on that. While yields are compressing and while there are smaller groups like ours, we will constantly challenge the market rent, and we'll constantly keep a lid on that, unless you've got a particularly restricted land supply position on the edge of a town, and then fair enough. But also the movement from large warehouses, again, the sentiment that they're just going to inner urban locations, it isn't a representation of the whole market. There's 25% of the market is big box, 100,000 square meters that are being taken up all around Europe. There are 10, 20 build-to-suit requirements like that across Europe at the moment who aren't and won't go to inner urban locations because they can't get access to labour, or prices are too high, land's too high, it makes them inefficient on their supply chain. So I just want to throw that in as a counter to some of those comments.
I agree entirely with what James is saying. I think the point I'm making is, that those big boxes, I think the demand's holding up very well. I totally agree with that. But really, to make your margins, you need to be a model similar to yours or Christian's, be a traded developer. If you're a long-term investor and you have a high cost of capital, the people buying those big boxes on the long leases, they are core plus investors. And that's perfect for you guys. And good luck to you and make hay while the sun shines. Absolutely. But I guess I'm just saying from a value add mid-teen IRR type perspective, it's very, very difficult to make that work if you're looking for duration, which we are, 5 to 10 year investment holds. We're not looking for a 2-year high IRR 1.4x multiple. We want 2 and we want 5+ years.
I'm just going to throw this one in. Hi, Tristram Frost from Garber. Going back to what Kevin was saying about all the occupiers' margins are being squeezed, how does that correlate with rising rents? Presumably it's rents going the other way, particularly if you know that in Germany at the moment, on new build stock, the rents are lower than existing stock, which I think will probably surprise quite a few people. And the other question I've got is the American supply of 3 times, or whatever it was, Europe, oversupply? Because at the moment in Europe, it seems to be, yes, there is growth and there's a shortage of stock, but in America they've got all this space, but how much of it's vacant?
Mm-hmm. The vacancy number, first about this, your second question, the vacancy number in the US is below the European average. So in Europe it's around 5.7 market average. In the US it's below that. Secondly, when you look at the different markets in the US, in general, with the exception, for instance, of Dallas, which is more reliant to oil, there are in general no markets oversupplied, what we see in the market. Another big difference compared to the US and Europe is that, let's say, the balance between net absorption, we track net absorption, and new supply levels is closer to each other. As you saw, for instance, in the charts of Kevin, you saw a bigger gap in Europe between demand and supply. So that's the difference. But key messages about the US, there's no market oversupplied. About this 3 times more space, it's about the stock levels. So the existing stock levels of modern stock. Will we ever get in Europe to the 7.5, 3 times more? I think that will take a long, long time. And please keep in your mind that the wealth levels in Europe in general are lower than the US averages. But I think for my key message for this 2.5, 7.5 is about the runway we have ahead of us and the rising adoption rate. And when you look at the past 10 years, for instance, and you look at the European growth, and I think it's about the resilience of the European logistics sector. So when you look at the economic growth in the past 10 years, the European economy grew by only 10%. While at the same time, when you look at the occupied stock, that one grew by 60%. So one of the drivers of that outperformance of logistics real estate relative to the economic growth has to do with the undersupplied market we see here in Europe.
I think comparing the United States to Europe, continental Europe, is probably misjudging something, may have very similar population size, but the density is completely different. So I would expect a much density inhabited continent like Europe requiring less logistics because the amount of changes until the final mile or last mile or the consumer is much less. So I'm not entirely sure about the comparison to the US. The key question I have here, though, is how about the affordability of logistic rents? If we have a look at retail, which we've heard makes a significant part of logistics activities to the final consumer, that we have to have a look at the financial health of retailers, and we know that many of them are suffering significantly. I mean, Marks and Spencer is a point in case. Many of them suffer very tiny margins. Now, if more and more shifts away from their shops to logistics-based retail, direct delivery, internet, what does this do to rents? If you have a financially constrained client, he can't pay a lot because his own profitability is limited. How much can he pay for logistics rents? What does this do for logistics rents in general, and especially last mile and the middle mile? Thank you.
So anyone want to pick up the rents? I mean, the rent, there was a rent question also from Tristram, rents here. Let's try and pick up that topic of rents in general.
I mean, I'll just make one point. I'll let the research guys give some colour, but I mean, generally rents are a lot cheaper for warehousing than for retail space. So, I mean, if you're talking about increasing your warehouse allocation and shutting shops, I'd say you'd still be saving a lot of money on rent. So I'd say there is affordability to that, but you know, I don't know how it compares to the sort of US on what metrics you have for that.
I try to keep away from the US.
Okay, keep away.
No, but I agree on you. But let's have a discussion about that later on. But
what you say about the populations is definitely true. I don't think
true.
anyone expects it to get to 7.5. It's just that the gap is probably too big.
Too big, exactly. Okay. But about e-commerce, that point, please keep in mind, and we published a white paper about that one, when you think about footprints from a brick-and-mortar retailer and an online retailer, the total footprint of, and this is based on financial filings and conversations we had with retailers, so the total footprint from a brick-and-mortar retailer is 3 times more than an e-commerce player, because they have much more retail space. So their total footprint is 3 times more, but their logistics space...
Isn't it for the e-commerce guys it's 3 times more than for the...
No, the total footprint, so the total including retail and logistics real estate...
You're thinking for the logistics, it's 3 times more
yeah.
sort of logistics required
okay.
per billion of sales.
But when you compare those two types of retailers only on logistics, an online retailer uses 3 times more logistics space. So total footprint is 3 times less, but 3 times more logistics real estate. Why is that? I think there are a number of reasons for that. First of all, it's about the shipment goes directly to the end consumer. So instead of big pallets of, let's say, toilet paper to your retail store, you have the individual picking and packing. That takes space. Secondly, an online retailer has more stock keeping units. So you need, in a way, a larger warehouse for all your stock keeping units, your different units you have in your warehouse. And thirdly, another reason why an online retailer is a more intensive user of logistics real estate has to do with the reverse logistics. Last point I want to make, and we're starting to talk about net effective, about the rents. We track rents by net effective rents, so headline rents minus concession levels. For Europe, on average, the net effective rents are still 13% below their prior peak we have seen back in 2007. So we are still below the levels we have seen back in those days. And there are significant differences throughout Europe. For Central Eastern Europe, Southern Europe, it's even around 20% below the levels. So now cap rates, in a way, the compression of cap rates is kind of stabilizing. We don't expect a similar cap rate compression as we've seen in the past years. You could expect some further rent growth on the continent especially.
But I would like to make one point, as we don't have a continent with a lot of growth. It's about replacing older, outdated buildings much more than keeping up with growth. And lower rent levels, as we see it now, purely being a financial result because construction prices are going up, land prices are high as ever. It's about replacement of old stock. In Germany, according to Fraunhofer Institute, we have 300 million square meters of warehouse space at all. Only 60 million of it is modern, meaning free heights of 10 meters or more. I mean, if you talk about trends and what's driving all that, the lower the rent for new built modern warehouse space is, the more replacement takes place. And that's the main driver, I would think, at least for Germany, possibly also for the Netherlands. So this is our growth story. Yeah,
Are you basically saying it's the low cap rates that are enabling you to keep the rents low? So then,
yeah. And so this is a strong driver. And then what is not in the stats is all the production facilities. If you see production machines today, they're not smelling and making noise and all the stuff. It's modern industry stuff which you have in a warehouse like you have normal racks in the warehouse. Yeah? If you add this, the replacement volume is gigantic. Yeah, it's gigantic. And so this is where we see a lot of growth. And then something we don't have in this discussion at all is sustainability. I mean, we have now a good insight because we see of our sister companies, all the other asset classes, if you see modern warehouse, office space, yeah, technological, sustainability, whatever, I must say logistics and light industrial are completely on a lower side of technological and sustainable level, if you will. So we have made it a mission to really get more sustainable technology into warehouse space, which drives then the demand from other customer groups. I mean, we're talking to production companies. They're used to take space for 20 years or longer. Mm-hmm. If they now have the chance to go for 15 years, they're happy. Yeah? And and also from the rental level, we're almost not talking to 3PLs anymore. Yeah, this whole flexibility thing, that's fine. But from an investment side point of view, what do you want to have? You want to have long leases. You want to have stable incomes. You want to have good covenants. Yeah, German Mittelstand, the hidden champions you have everywhere. Those guys are financially so strong. But if you see their facilities, yeah, when there was money, they added 1,500 square meters of production facility, and then after 5 years, another one. If you see the internal material flow, it's a mess. If they can go to a modern size facility, then the cost advantage they have is like 30%. If you are able, like we do in Frankfurt, we have photovoltaic on the roof, and we have a heating and cooling system that's all natural, so no gas, no other stuff. They're again saving money. So this is basically putting them in a much more competitive state. I built the Leipzig Amazon warehouse, yeah, and I've seen the power those guys have. And if you see what they're doing, they now even have their own airport, their own airplanes and so on. So where's the cooperation? Where's the market share? I mean, Amazon is doing everything themselves, more or less. Yeah, and if you want to develop logistics and light industrial real estate, so what is your offer to the market? Yeah, what are we talking about? We are not talking about big boxes with all the same technical requirements. We're talking about differentiating ourselves. We're talking about energy costs. We're talking about heating costs. We're talking about concepts to make it more attractive for the vast majority of potential tenants coming out of outdated buildings to get into new space. And this is a story in continental Europe mostly. Yeah, I agree with James Markby that there's a lot of big box stuff going on. And we're also only going 50,000 square meters plus in core markets. But this is a totally different equation than talking about e-commerce, I mean, what I see in Germany is same-day delivery. That will be the next big thing. Same day is, I mean, we have a total turnover of food retailers of 330 billion euros, and the food industry is doing 169 billion euros of turnover. Let's say they have 2 or 3% of logistic costs. That's, yeah. We're talking to the 650 biggest food producers in Germany alone. Everybody of them having 100 million turnover or more. Yeah, talking about covenants, talking about e-commerce startups and covenants. Yeah? So if you see, they have strong retailers really making it very hard for them to go into the market. Same-day delivery is the next revolution for them because they can reach their end customers directly.
Good morning, Matthew Whitaker, Deutsche Post DHL Real Estate. Kevin, thanks for the presentation. Great marketing for Amazon. It was refreshing to see in there that the image you used for the drone was actually a Deutsche Post DHL one. So thank you for that. You did doff your cap.
I try and be fair.
Thank you.
I noticed there wasn't any coverage of PropertyEU in the first slide.
I saw that, yes. Dereliction of duty. But thank you anyway. Some really interesting debate comments this morning. You know, a lot of the comments going out that we can relate to, we can talk about the campus strategy, tactical versus strategic. It's conversations we're having as a business. Depending on your sector, depending on your geography, there will be a requirement for a strategic response. There will also be the continued requirement for the tactical response as well. So we aim to challenge our business on both fronts, and we're exploring all. With regards to the changing of the network, it's probably no secret, but over the last few years, we've invested significantly in our German network, and all the talk of e-commerce this morning, the last mile, whether you believe we control it or the consumer designs their own last mile now, there is no such thing as a last mile, some would argue. But we have redeveloped in Germany, recognizing that nobody writes letters anymore. It's all parcels and packages. So over the last few years, we've developed over 200 sites across Germany. Everything from strategic parcel distribution centres such as Obertshausen, which is about 50,000 square metres, and has the capacity to produce or automatically process 50,000 packages an hour. This is all directly as a response to e-commerce. You talk about technology in logistics. I would counter that, saying that old-fashioned logistics may not. But if you look with an eye to the future and what e-commerce is driving, then technology is the big player. Digitization is going to have a massive impact on our business, and we're embracing it, and we're looking at how that is going to affect our business and drive it. And that may even, our CEO recently at Davos was commenting on cannibalizing our own business, the need to do that, and that's a healthy thing to do as we look to understand the impact of digitization on our business. But to go back to our networks, clearly that footprint is going to be a mix of large, geographically, strategically located centres such as Obertshausen, and that will be supported by an ever-descending size network, strategically located around urban conurbations, geographic locations, demographic locations, and that's been rolled out in Germany. That's already happened. That's here. And looking at some of the other things on your slide set, Kevin, in terms of automated vehicles, that's already happening in Germany for us. Not so much automated, although if any visit to our Innovation Centre website in Troisdorf will show you that we're exploring in hand with our CSR agenda the carbon neutral vehicles. We're now manufacturing our own. The research now is into battery life, because that's going to be one of the big influences on any city logistics solution. So I think my message is it's already happening. Technology, the new logistics centres,
big thing.
It's absolute, without doubt. The 100,000 square metre plus ones, they exist out there, and we've recently developed 1.4 million square feet in Texas for a large customer. They will always need that, so it's going to be that mix going forward. But I would say from a logistics point of view, it's going to be far more strategic. Does that answer your question?
That's great, thank you. Very good. I've got a quick question about investment, because this is what it's all about. So, where would you invest at the moment? Let's start with you, Dirk. What are your tips for the audience here about in terms of investing? Where should they look to invest?
Holland, obviously. No, they should be investing definitely in. I think the Netherlands is becoming a more and more interesting market. There's scarcity of land. Yields are still okay compared to Germany. There's a lot of appetite. There's a lot of upcoming companies. Also, a lot of startups in Holland who are becoming bigger and bigger. So I think there's definitely a big growth market in Holland, and it's going to be. I think it's going to be one of the more important markets in Europe, not in the sense of logistical hubs. I think that might still be Germany, but definitely on the technology level and on the first wave of new startups coming.
Okay, good. Dirk, where should we be putting our money?
I've just made a list of different things you could think about. First, remember about Europe, there's no thing about one European trend. So European trends are very diverse. So when you think, for instance, about cycles, I think when you right now would look at Italy, for instance, or markets like in Central Eastern Europe, great opportunities in general when you, for instance, think about cap rate compression. When you think about redevelopment all over Europe, reletting, short leases, I think it's interesting when you have the teams on the ground to have the market knowledge to redevelop and to relet quickly. I think another one, a market, an asset which is very interesting in our sector is about cross-docks. We didn't really touch it, but interesting new, within a way, assets within our sector. I expect some further growth for that one. And in general, for Europe, despite this, total speculative volumes are very low when you look at the total market conditions right now. I would still say very interesting still to focus on build-to-suits, larger, smaller, but still when you look at the global markets, so metropolitan areas, logistics corridors, I think those build-to-suits developments remain very interesting.
Okay, good. Christian.
Thank you. Well, I don't think anyone's going to be surprised what I'm going to say. I mean, we're actually doing it, so we're putting our money where our mouth is. We see in today's market the opportunity very clearly in urban infill locations, affluent cities, supply-constrained markets, smaller lot sizes, probably sub sort of 30 million, where we see value for money, and we're trying to buy as much as possible sub-replacement cost with a very, very strong underpinning of intrinsic land value. It's something we call mispriced functionality, and you actually see a lot of it across Europe, and that's where I think for sort of medium to long-term investor looking to generate high returns, that's where you should be investing. We will selectively speak to capital partners in due course, so if you want to discuss that, please find me. That's where I would put the money.
Okay, great. Christian.
Yeah, as the cycle is overdue and going on, at least I think until 2018, I think it's time to concentrate on core again. I think it's time to concentrate on campuses, be more flexible, not to have one tenant per warehouse, but to be a little bit more flexible. Warehouses that represent the trends, same-day delivery and replacement production facilities, good long leases. And yeah, we have sort of 20 to 24 metropole areas all over Europe where I don't think you can make a mistake if you really invest there. What we see currently is that good locations are redefined by developments somewhere in the vicinity because some big developers think that still makes sense. I would really concentrate on core and stay core. And I think that despite high growth rates in Europe, logistics will see a very, very strong growth story the next years.
Okay, great. One very quick one. I'll start with you and work down this way, which is it's still just about the new year. So what's your resolution for the new year, or what's your aim for 2017? Quick one, starting with you, Christian.
800,000 square meters of warehouse developed and delivered.
Okay, that sounds like a personal and a company aim, doesn't it? Christian?
Well, we're a very new company, so 2017 is a key year for us. We're going to expand our footprint across Europe and build up our assets under management.
Okay.
As well as continue to build the team, I might add.
Great, Dirk?
We as Prologis had a very good year in 2016, so I think it would be great if you could even repeat last year. For me personally, it would be about support to support the knowledge of investors, so the further institutionalization of the asset class, and to support the long-term story for logistics, where it's changing from in the total real estate sector from an ugly duckling to a beautiful swan.
Oh, I like that. That's good. Yeah, Doug?
Yeah, for us, obviously, it's going to be becoming the top 5 player in Netherlands on logistics with Savills. This is a good aim, and definitely one we should make this year. So.
Thank you for coming, and if you could join me in thanking the panel, that would be great. Thank you.